here's the four main stocks I hold in the public account, right? It's Meta, it's Tesla, it's Amazon, it's Elf, right? These are very volatile stocks. So they're going to go through big ups and big downs. And we saw last year them go through big downs. We see this year obviously go through big ups, right? Well, except Elf. I mean, Elf's pretty much only ups. It's just, I mean, that company is a whole different animal, okay? They're only ups. That's the only stock I probably hold that it's only gets good and better and better and better, okay? But nonetheless, folks, when you hold these sorts of stocks, you're going to go through some major ups and major downs, and that's just the way it is. And so you just have to come to that conclusion of like it's gonna be a roller coaster ride. It's gonna be bumpy from time to time. And you even look at some positions I have that are pretty big positions that are the smaller positions in that portfolio. Even a Palantir, for instance. A Palantir is an up and down stock. Palantir's earnings are Monday. This is a stock that at this time next week is probably gonna be anywhere between $15 a share and $27 a share. Literally, at this time next week, Palantir will likely be somewhere between 15 and 27, and it all depends on where those earnings come out and where that guidance comes out, if they give any guidance as far as that goes. That's a wide range, but that speaks to how volatile a stock like Palantir is. That stock's going to move, 10, 20, 30% easily next week throughout the trading week. It's going to be intense. And so, when you hold some of those sorts of stocks, you just got to understand you're going to go through some big ups and big downs, right? Now, the Dow Jones Industrial Average, it fell off a cliff here today. I mean, this baby, everything was looking good, and people are wondering what the heck happened here. I'll explain to you exactly what happened, okay? So, the July jobs report ended up coming out, right? U.S. payroll growth expected 187. That's lower than expected. Now, the issue with this is, in regards to the jobs report, we're almost in kind of like a no-win situation when it comes to jobs report. Because here's the deal. If jobs report comes in too good, that used to never be a thing, by the way. It was like, there's no such thing as too good. Now, if it comes in too good, people would say, oh, inflation's going to be a problem. We're going to have wage price spiral situation. And ultimately, that means the Fed has to continue to raise rates a lot longer, a lot higher than they are. And everybody gets all bent out of shape in regards to that, right? On the flip side, if the jobs report comes in worse than expected, lower than expected, then everybody says, oh my gosh, maybe a recession's coming. That's not good. That's not good for earnings. That's not good for companies. That's not good for anybody, right? So unfortunately, every time this jobs report comes out, it just feels like there's a no-win situation. It's either going to be too good and the Fed's going to have to keep raising rates, or it's going to be not good enough, and that means recession. And so the market's going to draw whatever conclusions it wants to draw. It just feels like right now when it comes to this damn jobs report, it feels like we're in a place of no winning in regards to that specific thing, right? Now, in regards to inflation, all inflation fears, I don't even know why, we still have any crazy inflation fears at this point in time. The next CPI is almost guaranteed to be in the twos, right? The last one was at 3%. In this one, this entire month, Truflation's pretty much had us in low twos. We should be in the twos. It's just a question of, are we 2.9, 2.8, 2.7, 2.5, 2.2? Like, what are we in regards to that, right? So there's always a potential of reinflation at the very end of this year or in 2024. But as of right now, at least, it seems like inflation is definitely being kind of put to bed. And so, but I think we're going to continue to worry about inflation. Even if it's not a problem, people are going to worry about it. And the reason being is just investors are scared. Why are they scared? Because of what happened last year, inflation went way higher than almost anybody anticipated and stayed way higher than anybody anticipated, right? When you have a situation like that, it scars people, it scars investors for years to go in the future. This happened coming out of the great financial crisis. If you don't know, I started in the great financial crisis in terms of my investing journey, right? And I watched investor after investor go on CNBC for the next year and a half, 2 years later, talking about, guess what? Double dip recession. We're going to have a double dip recession. And there was so much fear for the next year and a half to 2 years after the market had already bottomed in March of 2009. There was so much fear for a long time because investors were scarred. People were scared. They just went through the great financial crisis. A horrible, deep, dark recession that was ugly, right? Where the market indexes fell 50+% peak to trough, where countless stocks fell 50, 60, 70% peak to trough. You had a lot of bankruptcies, you had the housing crisis, you had all that simultaneously. It scarred people for years. until we finally got out of that. And then I stopped finally hearing about that around 2012. That's how long it took. So just understand, you're going to be hearing about people being scared of inflation for at least another year, if not 2 years to go into the future. So just understand, in terms of hearing about it, it's not going away. Amazon. So Amazon's my number 3 biggest and most important stock in the public count. It's, right after, obviously, you got Meta, the most important, Tesla's the second most important, Amazon third most important, right? So stocks up big after hours, right? Does it deserve to be up big? Yes, it actually deserves to be up 15 to 20% tomorrow. If the stock's up 15 to 20% tomorrow, that's the move it should be making. Anything less than a 15 to 20% move in Amazon shares tomorrow is actually too modest, okay? They destroyed earnings. They destroyed everything, okay? Amazon reports blowout profit beats on sales and issues optimistic guidance. Amazon, and by the way, Amazon pretty much always sandbags guidance. So if anything, whatever number they're putting out is probably lower side than what they're actually going to report. So it's just something to keep in mind, okay? Amazon report showed a return to double-digit revenue growth. The company posted its biggest earnings beat for its report in the fourth quarter of 2020. Amazon, 65 cents of EPS versus 35 cents expected, right? They destroyed EPS, right? Profitability of this company is going through the roof. Who's the one person that called this? Right here. If you've listened to me for the past 6+ months on Amazon, I told you guys, starting back half of the year and going into next year, profitability is going to skyrocket for this business model. And I went through all my bullish thesis on why the profitability is going to skyrocket for this company and why Wall Street's wrong. Guess who got it right again? Okay. Wall Street's way too conservative on their numbers, and they just got embarrassed here today. Absolutely embarrassed in the biggest way possible. The numbers are insane. Profitability for Amazon is going up way faster than really anybody anticipated other than me. I'm literally the only person that expected this, okay? Revenue came in at $134.4 billion. That's almost a $3 billion beat for the company. That's incredibly impressive, especially coming off of a goods recession, which we're now coming out of. That's very impressive. Amazon Web Services, $22.1 billion versus $21.8 was expected. Advertising business beat as well by about $300 million there. For the third quarter, Amazon expects sales of $138 billion to $141 billion. So we could say $140.5 billion, somewhere around there, roughly is the midpoint for Amazon's expectations, or growth between 9 and 13%. Analysts were expecting revenue of $138 billion. So here we got Amazon expecting probably 140 to 141 of revenue, which is several $billion ahead of what the street's at, right? The guidance reflects the strength of Amazon's 48-hour Prime Day discount event held in July, which the company touted as its biggest ever. Yeah, from what I heard, it was insane, man. The company reported net income of $6.7 billion, or 65 cents a share, after recording a loss of $2 billion and 20 cents a share a year earlier. The year-ago loss was a result of a markdown on the company's investment in Rivian, which is exactly what I told you guys. That's all wearing off now, and so be expecting that their profitability is going to skyrocket, right? Now, if we look a little deeper in the numbers, it's green everywhere. Net product sales were up substantially. Total services sales were up substantially. I mean, over $10 billion on a year-over-year basis. We're looking at total sales up a little over $13 billion. Meanwhile, as far as total operating expenses was up a little less than $9 billion. Well, guess what? You tell me you're tell me your revenue's up that much, and you tell me your expenses are only up that much. I'm going to say your operating income's going to explode, and that's exactly what happened with the company. The operating income was up about $4.3 billion on a year-over-year basis, which some people say operating income's the most important thing to look at with Amazon. Some people say it's free cash flow. Everybody's got a different opinion, okay? For me, it's always forward P based upon what I think your future growth rates are, and then running those P metrics out several years and saying, am I getting a steal deal on the stock, okay? Net income for the company came in at $6.7 billion, right? EPS obviously exploded for the company. And here's the best part with Amazon. This is the best part. The stock is trading way cheaper than anybody thinks right now. Based on what analysts have, which analysts are completely wrong, based upon what analysts have, the company trades at about a 50 forward P, which looks very rich. The market in general trades under a 20 forward P. So the fact that Amazon's over 50 looks extremely rich. But here's the thing. The company just almost doubled up what analysts were expecting for EPS. So the profitability you're going to see from this company over the next many quarters is going to be far better than anybody's anticipating. So what you're paying for Amazon is actually a much cheaper price than you think you're paying on surface level. And that's what makes Amazon extremely attractive stock right now. And it's one of the few stocks in the stock market that I could say, you think you're paying a rich valuation for it. You think you're paying an expensive price. You're not. You're actually getting a steal deal on this stock, even though it doesn't look like it on surface level, okay? Now, to dive a little bit deeper, I don't know if you guys saw these sales numbers. Operating income in North America came to $3.2 billion. That's versus a loss in the same time last year, right? International loss got cut substantially. Now, I had that in blue, not green. The reason being is it's still a loss. They're going to flip profit. They're going to flip to profitability in international. There's no doubt about that. They're not there yet, but they will flip to profitability. It's just a question of, are we waiting, a few quarters for that? Are we waiting for a year for that? That's the only question. Amazon Web Services, here's the best part. Amazon Web Services is actually a holdback for the company profitability-wise, because obviously they're spending a ton in AWS right now, so the operating expenses climb quite substantially. AWS looks like it's going to get back to very nice growth. And so, if anything, I think their operating income can actually start going up at the end of this year and going into 2024, which is going to be fun because that's just another huge boost on the profitability. And I mean, imagine usually AWS's operating income is just going up and up substantially. Imagine what this operating income is going to be a few quarters from now, dare I say a few years from now, right? North America was up about 11% in terms of sales growth. International was up 10%. AWS up 12%. Very nice numbers. Very nice numbers. As far as the balance sheet goes, they're now up to 100. This is as of June 30th, so it's even probably stronger now. Total stockholder equity, $168 billion. That's from $146 billion as total stockholder equity at the end of last year, right? So in regards to me and Amazon, what am I up to here with the stock? Am I planning on cashing out some shares now that I have very nice profit on these? Am I planning on buying more? Am I planning on doing anything options related? So first off, selling, no, definitely not, okay? We'll speak about buying in just a moment. Options, no, I'm not as interested in Amazon options as I am something like a PayPal. PayPal, the risk reward, especially as of tomorrow, is just way more attractive in my personal opinion from a shorter term perspective, which options you're really putting yourself under the gun because of the time horizon, right? So that's why Amazon, it has to be such easy money for me to consider doing a call option on, because this is not something I usually do. It's got to be super easy money. So if I look at Meta last year in Q4 of 2022, such easy money. I should have been doing some calls. But look at PayPal right now, valuation where it's at, the growth story where it's at. I think that stock's going to easily be a double up, triple up type stock over the next couple years here. So Amazon, bullish, but I don't want to put myself under a time horizon. So am I buying it? The answer is yeah, I'm going to probably still be a buy actually. As of tomorrow in the public count, I'll probably be up about $30,000 to $40,000 on the stock, but the stock's still a damn buy. And so don't be surprised if you continue to see me buy more shares through the remainder of this year, folks. And I could buy Amazon on and off for years to go in the future, very similar to how I've done with stocks like Meta and Tesla. Don't be surprised if Amazon one day is a $500,000 position in the public account or so.